Before you call Social Security, Medicare, or anyone claiming they can increase your retirement check, I want to make one thing clear. There is no secret phone number that creates a bonus out of thin air. No representative can simply press a button and hand every senior an extra $1,000. But there are 5 official calls that can uncover a benefit you never applied for, reduce a deduction coming out of your check, or correct information that Social Security is using to calculate what you receive. For the right household, one of these calls can be worth a few $100s a month. In a survivor benefit situation, the difference can sometimes exceed $1,000 a month. Not every call will apply to every person. Some people will make all 5 calls and learn that everything is already correct. That is still valuable. The purpose is to replace assumptions with an official answer based on your own record. I will give you the exact question to ask on each call, the rule behind it, and the warning that keeps you from making the most common mistake. Stay through call number 5, because a missing earnings year can affect checks for the rest of your life, but the amount is not the same for everyone. And please protect yourself. Make these calls yourself using the numbers published on socialsecurity.gov or medicare.gov. Do not trust a phone number sent in a text message, an email, or a social media comment. Social Security will not ask you to pay with gift cards, cryptocurrency, or a wire transfer. If this kind of plain English explanation helps you, subscribe now. The goal of this channel is not to promise money that does not exist. It is to show you which questions are worth asking before another month passes. Call number 1 is a spouse or divorced spouse benefit review. This call is for people who are married and for some people whose marriage ended in divorce. A spouse may qualify for a family benefit based on the other spouse's Social Security record. At full retirement age, the maximum spouse amount can be up to 1/2 of the worker's benefit amount at full retirement age. That last sentence contains 2 details many videos leave out. First, the spouse amount is based on the worker's full retirement age amount, not necessarily the larger amount the worker receives after delaying until age 70. Second, Social Security does not pay your full retirement benefit and then add a full spouse benefit on top of it. If you qualify for both, the combined payment generally brings you up to the higher amount for which you are eligible. It is a top-up, not 2 complete checks. Here is a simple example. Suppose your own retirement benefit is $900 a month. Your spouse's full retirement age benefit amount is $2,600. 1/2 of that is $1,300. If you qualify for the full spouse amount, the difference could be $400 a month, but your actual result may be lower. Claiming before your full retirement age can permanently reduce a spouse benefit. Work earnings can temporarily affect payments before full retirement age. Family maximum rules may also matter in some households. Social Security normally checks retirement and family eligibility when a person applies. The mistake is assuming that no review is ever needed after circumstances change. Maybe your spouse filed later. Maybe you did not provide complete marriage information. Maybe you were told years ago that you were not eligible, but your former spouse has now reached the required age. For a divorced spouse, the marriage generally must have lasted at least 10 years. You generally must be age 62 or older and unmarried. If the divorce has lasted at least 2 years and both former spouses are old enough to qualify, the worker may not need to have filed yet for the former spouse to be independently entitled. Call Social Security at 1-800-772-1213 and say this: I want to review whether I qualify for a spouse or divorced spouse benefit, and I want to compare that amount with the benefit on my own work record before making any change. Have dates of marriage and divorce available? If possible, have the other person's Social Security number, date of birth, and identifying information. Do not cancel or change an existing benefit until the representative explains the monthly amount, the starting date, and any reduction for age. Call number 2 is a survivor benefit comparison. This may be the most valuable call in the entire video for a widow, widower, or surviving divorced spouse. A surviving spouse may qualify beginning at age 60 or from age 50 through 59 if the survivor has a qualifying disability. In many cases, a surviving divorced spouse may qualify if the marriage lasted at least 10 years. Remarriage rules matter, especially when the remarriage occurred before age 60. Survivor benefits can range from about 71.5% to 100% of the deceased worker's benefit, depending on the survivor's age and circumstances when the benefit starts. A person who waits until survivor full retirement age may receive up to the full survivor amount. Again, you do not normally receive your full retirement benefit and the full survivor benefit at the same time. Social Security generally pays the higher amount, but survivor rules can create claiming choices that do not exist with ordinary spouse benefits. Depending on your age and record, it may be possible to receive one type of benefit first and switch to the other later. That is why this call can be worth far more than the $255 lump sum death payment people often hear about. Imagine that your own retirement benefit is $1,200 a month. Your deceased spouse had a benefit of $2,400. If you are eligible for the full survivor amount, the difference could be $1,200 every month. Claiming earlier could reduce that amount, and each case must be calculated individually. But this is a real reason the headline number can be possible for some families. Survivor benefits cannot currently be applied for completely online. You need to speak with Social Security and arrange the application. If you are already receiving spouse benefits when your spouse died, Social Security may automatically convert the benefit, but you should still verify the amount and ask about the one-time death payment. Call 1-800-772-1213 and say, "My spouse or former spouse died. I want a complete survivor benefit comparison, including the amount available now, the amount at survivor full retirement age, and whether I can take one benefit first and switch to another later." Do not ask only, "Do I qualify?" Ask for the actual dollar amounts at different start dates. A yes or no answer does not show you the long-term trade-off. Call number 3 is about the Medicare Part B premium being deducted from your Social Security. In 2026, the standard Medicare Part B premium is $202.90 per month. For many beneficiaries, that money is removed from Social Security before the deposit reaches the bank. That equals $2,434.80 over a full year. Medicare savings programs are state-run programs that can help eligible people pay Medicare costs. The Qualified Medicare Beneficiary Program, known as QMB, can pay Part A premiums when applicable, Part B premiums, and Medicare deductibles, coinsurance, and copayments for covered services. The SLMB and QI programs can pay the Part B premium. For 2026, the federal monthly income limit listed for QMB is $1,350 for one person and $1,824 for a married couple. The federal limit for SLMB is $1,616 for one person and $2,184 for a couple. The QI limit is $1,816 for one person and $2,455 for a couple. Federal resource limits also apply in many states. For QMB, SLMB, and QI, Medicare lists $9,950 for one person and $14,910 for a married couple in 2026. But do not reject yourself based only on those figures. States can use rules that are more generous than the federal limits. Some income may not count. Some resources may not count. Limits are higher in Alaska and Hawaii. The state agency makes the final decision. This program does not technically raise your Social Security benefit. It can raise the amount that reaches your bank account by removing the Part B deduction. That distinction is important, but the money in the monthly budget is still real. Apply through the Medicaid agency or other office that handles Medicare savings programs in your state. You can call 1-800-MED-CARE, which is 1-800-633-4227, and say, I want the contact information for the agency that accepts Medicare Savings Program applications in my state. I need to be screened for QMB, SLMB, and QI. Then call the state agency and ask for an application. QI funding is limited and applicants generally must reapply each year, so do not assume last year's answer settles this year's eligibility. Call number 4 is an IRMA-A review for people paying more than the standard Medicare premium. IRMA stands for Income Related Monthly Adjustment Amount. It is an extra amount charged for Medicare Part B and Part D when income is above certain thresholds. For 2026, the first IRMA threshold is modified adjusted gross income above $109,000 for an individual return or above $218,000 for a joint return. Social Security generally uses tax information from 2024 to determine the 2026 adjustment. At the first Part B IRMA-A tier, the total monthly Part B premium is $284.10. At the highest tier, it is $689.90. That means the income-related addition ranges from $81.20 to $487 per person each month. A separate IRMAS amount may also apply to Part D. The call matters when the old tax return no longer represents your current household income because of a qualifying life-changing event. Examples include marriage, divorce or annulment, the death of a spouse, stopping work, reducing work, losing or receiving a reduction in pension income, certain losses of income-producing property outside your control, and certain employer settlement payments. Be careful here. Selling a house voluntarily, completing a Roth conversion, or watching investments decline does not automatically qualify as a life-changing event for Form SSA 44. Those situations may require a different review or appeal process, and approval is never guaranteed. If your premium is above $202.90, look at the notice before calling. Confirm whether the extra amount is IRMA-A, a late enrollment penalty, or something else. Then call Social Security and say, I am paying an income-related Medicare adjustment and my household income changed. Please tell me whether I qualify for a new IRMA-A determination and whether I should submit Form SSA 44 or use another appeal process. Have evidence of the event and an estimate of your newer modified adjusted gross income. Depending on the facts and timing, Social Security may lower future premiums and may adjust amounts already charged. Do not rely on a video that promises the surcharge will disappear the following month. Ask the representative when the decision would take effect in your specific case. Call number 5 is an earnings record correction. Social Security generally calculates retirement benefits using your 35 highest years of indexed earnings. If you have fewer than 35 years, zeros can enter the calculation. If an earnings year is missing or too low, the benefit calculation may be wrong. But ignore anyone who says every missing year automatically costs exactly $100 a month. The effect varies. A correction may create a large increase, a small increase, or no increase at all if that year is not among the 35 years used in the calculation. Start by signing in to your My Social Security account at socialsecurity.gov. Review the earnings history year by year. Compare it with W-2 forms, tax returns, pay statements, or other records you still have. If something is wrong, you may be able to request a correction online. You can also call Social Security. The general time limit for correcting an earnings record is 3 years, 3 months, and 15 days. After the end of the year in question, but important exceptions can allow older records to be corrected. That is why you should not assume an old mistake is impossible to fix. Call 1-800-772-1213 and say, I reviewed my Social Security earnings record and found a possible error for these specific years. I want to know what evidence is required and how to request a correction. Name the years. Explain the employer or self-employment income involved. Ask whether your documents are sufficient before mailing originals anywhere. Social Security may accept W-2 forms, pay stubs, tax returns, or other evidence depending on the problem. If you already receive benefits, ask whether a correction would trigger a recalculation and whether any past adjustment may apply. If you have not filed yet, correct the record before choosing a claiming date whenever possible. Now let us put the 5 calls in one place. First, ask for a spouse or divorced spouse benefit comparison. Second, if a spouse or former spouse died, ask for a complete survivor benefit comparison at multiple claiming ages. Third, ask your state to screen you for QMB, SLMB, and QI so you know whether the Medicare Part B deduction can be covered. Fourth, if you pay IRMAA and your income changed, ask Social Security which review process applies. Fifth, compare your earnings record with your own documents and request a correction when something does not match. None of these calls creates a universal bonus. None guarantees an increase. But each call addresses a real rule that can change what an eligible person receives or what is deducted from the monthly deposit. Write down the name of the representative, the date and time of the call, what was promised, and any confirmation number. If the answer is unclear, ask for it in writing or schedule an appointment with a local Social Security office. For free Medicare counseling, you can also contact your state health insurance assistance program. Share this video with a spouse, a widow or widower, a divorced friend, or someone whose Medicare premium is taking a large bite out of the monthly check. The most expensive Social Security mistake is often not a bad decision. It is never asking the question at all.